So you're ready to start investing, but how do you actually pick stocks?
How do you choose from all the possible options?
What even is a good stock?
Well, today, you're going to find out.
I'm Steve.
I'm Cian.
And this is the Learnings Report, a show where we make investing accessible and understandable for everyone.
So today we're going to be talking about how to pick good stocks.
So a quick note before we dive in. You don't need to pick individual stocks to be a great investor. In fact, for many, investing in an index fund, which tracks the overall market performance, is often the easiest and most profitable way to invest, without having to worry about research, analysis, or any of that stuff.
We'll be doing a video on index funds, so make sure to check it out when it comes out.
But we believe in investing in both index funds and individual stocks as part of a diversified portfolio.
So if this sounds like you, stay tuned.
So there are two ways of picking and analysing stocks: qualitative analysis and quantitative analysis. But hold up, don't tap out just yet. Cian, help us out here.
Basically, quantitative is the number stuff, so stuff you can measure. So for example, revenue, margin, level of debt, number of members on your platform, all that kind of good stuff. I will be talking more about this in another video, so stay tuned for it. Whereas qualitative analysis is looking at the non-number stuff. So for example, looking at a company's leadership, its growth potential, or the competition. And that's what we're talking about today.
When trying to pick or find stocks to invest in, there are a couple of main things you want to look at. Number one, start with yourself. If you're going to invest for the long term, you need to invest in companies that you actually believe in. Companies you admire. Companies whose products and services you use, or at least companies that you understand. Grab a pen and paper and ask yourself some of the following questions. What do you regularly spend your money on? What technology products do you use? What services do you subscribe to? What brands do you spend your money on? What products and services are essential in your day-to-day job? A lot of the time, some of the best investments are companies and services that you use already, because if you spend your money on them, chances are somebody else does too.
So for example, currently we're using a Panasonic camera, and we will then be using an Apple MacBook Pro to edit on Adobe software, subsequently post on YouTube, which is a Google product, all the whilst wearing Nike shoes.
But remember, not all companies are publicly traded, so give your company a quick Google search to find out if it's private or public. Number two, understand the business. When picking a stock to invest in, you need to understand the company, what it does, and how it makes its money. Warren Buffett described this as your circle of competence. And all this means is investing in things you understand. Why? Because if you understand a company and what it does, one, you'll enjoy following it and watching it grow. Two, it'll be easier to understand the business and the numbers and metrics behind that business and what they indicate.
For example, if you own a company that has a bad quarter and the share price drops, what are you going to do? If it's a company you have no belief in, you have no idea what it does, how are you going to know if this is a short-term headwind or a longer-term problem?
But if you really believe in the company, its long-term potential, its products and services, you are much more likely to stick with that company over the long run. The next thing to look at when picking a stock is its growth potential. Ask yourself some of the following questions. Does the business operate in a fast or slow growing industry? Do you think the products and services of the company are going to be relevant in 5, 10, 15, 20 years? How does the company shape up against competitors? And most importantly, what do the customers say about the product or service? When we're picking stocks, we like to see companies that operate in fast growing, future relevant industries, have strong brand evangelists, and a brand evangelist is just a customer who's passionate about the company and never shuts up about it.
You know that friend? Maybe pay more attention.
And lastly, look for companies that sell a unique or competitive product or service.
One industry, for example, that you may want to look at is green energy instead of oil or gas industries. When comparing to the oil or gas industry, you might ask yourself whether companies like NextEra Energy, First Solar, or Tesla are going to perform better or worse than companies in the oil or gas industry.
Given the trend away from fossil fuels and harmful environmental products, we'd probably guess green energy will outperform. But that's something you need to ask yourself when doing your research. The next important thing to look at is a company's leadership. Just like the captain of a sports team, a company's leadership decides the direction and focus of a company's operations and how it plans to grow.
Not only that, but the company's leader most likely has their salary and benefits tied to the company's performance, so it's in their interest for the company to perform well. Some things to look out for when choosing a stock to invest in are: does the company have a founding CEO? What's your personal impression of the CEO? What's the CEO's rating on Glassdoor.com? What percentage of the company do insiders own?
So when we're picking stocks, we like to see a company that is founder-led, or at least if it's not founder-led, a company that is led by someone who is either very invested in the company or has a lot of experience in relevant industries. a CEO that is held in high regard by employees. And you can find this information by going to glassdoor.com, searching the company name and looking at their rating. Anything over 80% is pretty solid. And lastly, a good level of insider ownership. What is insider ownership? If you go onto Yahoo Finance, search your company, and go down to this page here, you can see the percentage that is owned by insiders. This figure explains how much of the company is owned by either the founders or its employees. Ideally, we like to see a number that is higher than 5%, and usually the higher the better. Why? Because the higher the insider ownership, the more of an incentive that company's employees and founders have to grow the company, because they're going to be rewarded for it.
One, if not the most important thing to look at when picking stocks, is a company's competitive advantage.
Right, because a competitive advantage or a competitive moat is what protects a company from its competitors.
Some of the competitive advantages to look out for when picking a stock are pricing power, a company's ability to set prices.
If Netflix or Spotify charged you $1 or $2 more tomorrow, would you pay it? If the answer is yes, it's an example of pricing power.
Switching costs. How easy or difficult is it for you to switch to a competitor?
Banks and financial services are great examples of high switching costs. It is a pain to switch your bank, change all your cards, your debit cards, all that sort of stuff. So you just end up staying with the same bank.
Intellectual property or trade secrets?
Do you know the recipe for Coca-Cola?
A strong brand.
Apple is synonymous with superior design and premium prices.
Barriers to entry. How difficult is it for competitors to enter the market?
How many people could start an airline company tomorrow? Not many.
Economies of scale. Things become cheaper the more you buy.
Think of Amazon. It would have huge economies of scale due to its size.
Network effects.
Facebook and Instagram are only popular because everyone else is on Facebook and Instagram. If you need a recap of any of these definitions, check them out in the description below.
So now that you know what to look for when picking a stock, we're going to leave you with one final tip.
Although you shouldn't base your investment decision on what people tell you, you should listen to the companies they're talking about and then do your own research based on those tips. And use some of the things we've discussed in this video to do that.
We would recommend getting on Twitter and following some of the great stock analysts there. We'll link their Twitter handles in the description.
There are also some great stock picking services out there. Some are paid, some are for free. We'll link those in the description as well. But really, and this kind of brings us back to point one, use your own eyes and ears, look around. That's probably the best place to find great companies to invest in.
In summary, find great stocks by looking at where you spend your money already, investing in companies you understand, looking at growing industries, finding companies with strong leaders, and investing in companies with competitive advantages.
Make sure to tune in next week when we'll be doing part 2 of this video, quantitative analysis or the number stuff.
If you have any questions, please leave a comment below.
And if this video helped you out, feel free to give it a like or subscribe to the channel.
Thank you for watching and see you in the next one.
Love it.